Hey trader, I'm loaded Forex, aka no signal, no entry. Support is a price floor zone, holding price from falling down, while resistance is a price selling zone, holding price from going up. These areas are based on historical price and how many times price has reacted at the support and resistance zone. In today's video, I want to show you how to use these areas of support and resistance to make good trading decisions during trending market. And if that sounds good, click the like, subscribe, and turn on the notification button, and I will see you after the intro. When the price action is trending up by giving us the features of bullish market structure, higher high, higher low, higher high, then a pullback phase to give us a new higher high. Now this place is serving as our higher high, then higher low, then higher high, higher low. These are the basic features of uptrending market, right? When you establish a bullish trending market, you have to look out for the last resistance that was taken out. This place was the last resistance. Price invalidated it, then price gave us a retracement phase, retested this resistance, now turned to support, then price action back to the upper side. These are the basic things that you must understand how to use support during bullish market structure. In a downtrend market, when the price action is forming lower high, lower low, lower high, lower low. As a professional price action trader, you need to focus your attention on the last previous support taken out by the sellers, now turned to resistors. This place was the last support here that pushed the price to the upper side before the sellers finally invalidated it, now turned to broken support. Then the buyers pushed the price action to the upper side again to retest the broken support, now turned to resistance. And this resistance zone is our area of value or point of interest where we want to take possible sell opportunity. What happened? The sellers sold down the price action. Then where is the last lower low that was taken out? This is another lower low that was taken out. It was serving as support before, but pushed the price action to the upper side to retest this previous resistance. Now the price action sold again to take out the support. It's no longer support anymore. It's now broken support, now turned to resistance. So we're expecting the price action to retrace now to this new resistance zone. Then we look out for a possible sell opportunity to the downside. And another basic rule you must not forget to use or to pay attention to during trending market. In a downtrend market, when the market is trending down, you must ensure that the last lower high must be protected. Price must not invalidate the last lower high during a downtrend market. This zone was serving as the last lower high during this downtrend market. So the price action must not retrace and trade above it. Anything that made the price action to trade above it is no longer a downtrend market anymore. We are now back to bullish market. The same thing applicable to bullish market structure. When the market is trending to the upper side, the last higher low must not be taken out. You must pay 100% attention to ensure that the price action did not take it out. The moment you realize that the price action is not trading below this support zone or the last higher low, we are still in a valid bullish market condition. But if the price action trade below this last higher low during this bullish market condition, we are no longer in a bullish market anymore. We are now back in a bearish market conditions. All these things are very, very important. So let me take you guys back to chart. This is a beautiful example of bullish market structure when the market is trending to the upper side, right? The initial market condition was bearish where the price action was selling to the downside. lower low, lower high, lower low, lower high, equal low, lower high, then lower low, before the price action invalidated the last lower high during this bearish market condition. Where is the recent resistance that was taken out by the buyers? This zone is the recent resistance that was taken out by the buyers. So let's expand our rectangle tool by double clicking, come to style, click extend right, extend left, so that we can check the historical data. Price reacted here, price reacted here, price reacted here, price reacted here, price reacted here. If the price action retests this key zone, there is tendency for price action to buy to the upper side. This zone is our last low. Now we're not having a new higher high right now. So what we're expecting now is price action to retest this zone, then we take buy opportunity. So this support zone is now serving as our point of interest, our area of value where we want to take possible buy opportunity. Now the price action retested the support zone. What you have to do is to scale down to the lower time frame, which is 30 minutes to 1 hour 15 minutes, and use the entry system that I've explained in the previous video, that you have to watch out for volume reduction on the entry time frame and change of structure to align with the bullish market structure on the higher time frame. Let's assume we are executing this trade around this zone here, then we're going to target the next possible resistance zone. But normally I used to target ratio 1 to 2, so I will target this resistance here. This is a possible resistance zone. Let's play the candlestick. Boom, price action reached this resistance zone and also invalidated it and took it out to the upper side. In a downtrend market, when you realize that the price action is already forming lower low, lower high, then lower low, one thing that should come to your mind as a professional price action trader is, where is the last key level that was taken out by the sellers? Where is the last support on to resistance? If you check the historical market data, you agree with me that this place is the last support zone that was taken out by the seller. If this place was serving as the last support, because price action reacted here, reacted here, reacted here. So if price is coming back in the future, price is going to respect this resistance here, then we take a sell opportunity to the downside. Now what we're expecting now is a pullback or retracement phase, so that we can take possible sell opportunity to the downside. Let's play the candlestick. The price action is now at our point of interest. You scale down to the lower time frame and watch out for the two signs, volume reduction and change of market structure. If you have not watched the previous video where I explained the entry time frame and how to execute it, go and check my previous videos that I uploaded on my YouTube channel so that you can learn how I execute my trade. We're going to use our sell position order here, then we target the next support zone. This way was serving as the last support zone here. So let's play the candlestick. Now the price action smashed our take profit level zone. If you want to learn more from me and also get access to my weekly signals on Telegram community, click on this link. It will take you to my Telegram channel where you can get access to other Forex educational materials on my Telegram community channel. Don't forget to click on the like, subscribe and turn on the notification button so that you can get notification whenever we upload another exclusive Forex video like this. See you next time, guys.